There we go. I think we're finally live here. Hi, folks. My name's Eric Wilkinson. Welcome to Pro Trader Strategies, and this is Spotting the Trade. September 14th. Well, we've been talking about this for a couple of days now. We're waiting for the CPI here in the United States. Now, if we're going to look at something, let me pull this up just for a marker because I want to draw on this real quick. So when we're looking at these economic data points, let's talk about CPI. CPI is the first one that we get. Let me do that. So CPI is the first one we get. All right, actually, sorry. PPI is. PPI is Producer Price Index. That is what the producers have to pay for the raw goods that goes into the manufacturing sector. Then we have the CPI, which is the Consumer Price Index. This is anybody who is a consumer of any product. So you could be a manufacturer and still be a consumer. So what you're doing is you're buying goods that may be partially manufactured. You're putting it into your product and creating a new widget. So, and ultimately, then we come up with the PCE, which is personal consumption expenditures. Ultimately, this is down to the retailer. We've stripped out some of the other manufacturers that are still consumers, but we go all the way down to the personal consumption. So what we've seen here recently is we've seen prices go higher on the PPI, which is the Producer Price Index. CPI, we're getting out today, and CPI, Consumer Price Index, downticked a little bit. So we're seeing CPI price go down. What does this mean between these two? There's a bit of a disconnect here, right? We're seeing prices go up for the producer, and then Consumer Price Index is coming down. That is negative profits for the producer, because they have to pay elevated prices maybe for some of these transitory aspects of what's going on in the economy, shipping, all of that stuff, but they aren't able to offset that to the consumer. Now, what is going to happen when we get the personal consumption expenditures? I'm expecting those to remain unchanged now. Why? Because the loss has already happened here, all right? What we normally would see, especially if it wasn't transitory, is that the producers see the higher prices coming into the manufacturing process. They try to offset that to whoever they are selling to. They aren't able to do that at this point. So something to keep an eye on, corporate profits heading into this next earnings season. We're right around the corner. It's going to be something that people will be talking about as this data starts showing up in the markets, all right? Something we did notice in, I don't always talk about it, the Swiss PPI, Producer Price Index, spiked massively to 0.7%, expected to be 0.2%. So that's where I'm talking about. We're seeing those inflationary pressures coming into the manufacturing sector. Now, don't get me wrong, Swiss isn't a major manufacturing sector, but they are feeling the same pricing pressures that the rest of the world is as well. So let's move back here to the United States and talk about our economic data. We got the National Federation of Independent Businesses. That is a small business index. We've been seeing that come off just a little bit here as of recently, but today we got a nice move to the upside on this. It moved back above 100. Good to see there. Expected to be 99. Last month's nothing, no change to the original reading from last month's number. It still came in at 99.7, but remember that we had dipped below 100 on that reading. It was the first time we'd seen a dip below in a couple of months. So back above that, seems like the consumer's a little bit more confident. Well, we're seeing a lot of weakness across the board today, especially in the casinos. Travel and industry is struggling. Why? Because in China, we've heard about this breakout. I think it's in the Fijian province there. That's very close to Macau. And Macau is really the Las Vegas of Asia for the most part. That's where people are traveling to do their gambling. Now, the people that have the most exposure there, Las Vegas Sands, Wynn, all right, are struggling today. We're looking at crude oil here. It's a little bit weak, but let's just jump over to those other ones because I'm talking about them. Wynn, you can see a massive drop today. Why? Because if they are going to shut down Macau or have another round of quarantine in Asia, that is going to really hurt these guys because a lot of their profits come from Macau. You'll see MGM is seeing some weakness, Las Vegas Sands. Now, which one isn't? Well, it's PIN. Why? Because they don't have that international exposure like everybody else. But I think PIN is going to be the bellwether throughout all of this. Why? Because they've got Barstool Sports in their back pocket. Portnoy is a marketing genius. And as far as I'm concerned, that's my own opinion. But I think that PIN will be the one that kind of has the bellwether, as especially gambling here in the United States really is taking off. Gold futures moving a little bit higher. That's going to be off of those inflationary pressures. We're going to see some move upwards in gold futures as inflationary pressures rise. Bitcoin making a move to the upside. Now, we talked about that big conundrum yesterday with Litecoin and its big move to the upside after somebody sent out a tweet that Walmart was going to be expecting Litecoin. That is not true. They have not said that. So therefore, that market came off quite a bit yesterday. I still think that Bitcoin and Ether are going to be the ones that really be the safer investment if you're looking to get into some of these highly volatile cryptocurrencies. Sorry, my dog doesn't want to stick around anymore. All right, we're seeing the VIX make some moves today. NASDAQ in positive territory, but for all intents and purposes, it's right there where we were yesterday. And the Dow Jones, we're right at the point of control, folks. There's not really a lot going on here. We're seeing some volatility spike, though, in some individual names, but not really across the board. Now, yesterday I was talking about the E-mini S&Ps coming down and testing this trend channel that I have set up here. Another test of that today. No confirmation, though, at this point, whether or not we're going to break below this or not. We've got that 50-day simple moving average right below here. That's going to give us some support as well. It just happens to line up with my trend channel now. But I'm not getting involved in a bullish move on this until I get some confirmation. It's a little bit too messy. I'll show you the SPY trade or chart here in a second. You can see economic data from us, seeing the consumer price index coming off. That's signaling to people today that with the PPI being elevated, the consumer price index not being so much, those higher prices are not being able to be offset as you sell your product. That means your profit margins are going to come off. We talked about that earlier. That's exactly why we're seeing this slide in equities today, is really the fact that, hey, these folks are going to have their margins eaten into on this inflationary pressures. This is what I was talking about yesterday. We broke down below the trend channel here. Looked like we were making a nice little bottom, but we did not peel back up into this trend channel. So I'm staying away from this trade at this point. But that's when you would want to initiate a kind of a bullish trade here, is once we get back into and settle inside of this trend channel. Okay, so if you're looking for playing a bullish move in something like SPY, even SPX, that's what you're going to be looking for, is a revisiting of that trend channel. Outside of that, we're going to see some more weakness coming in, and especially in this with the SPY or the E-mini S&Ps, since the point of control is much lower than the 50-day simple moving average, it's not going to act like what we saw over there in the Dow Jones. Remember when we saw the Dow Jones, the 50-day simple moving average is lining up right with the right with the point of control here. So with this being a support and resistance signaling near time weakness in the Dow Jones, I would say it's a little bit less impactful here because of the point of control. The point of control is a magnet. It's where most time and volume has been spent. So as we transact all day long at the same price, you get comfortable at that pricing point. So that's what the broader market feels when we are at this point of control right here, is that the market is saying, hey, you know what? We're not really going anywhere. We've been seeing this price for quite some time. So the point of control is not going to be, or the point of control is going to break the support resistance of that 50-day when they kind of line up there. It'll toggle back and forth. Some people that aren't layering on this market profile are going to be saying, you know what, that's a support and resistance, but that's because they don't have this point of control over there. Let me try and make sure I got that clicked off so I can click on. All right, so Dow Jones, you can see, is not going to have the same similar situation here. We can see the 50-day will definitely act as a support here. Break below that, though, we would revisit somewhere around that 415 area in this SPYs. All right, Macy's. All right, Macy's coming off a little bit today. I was looking for it to come down and test this 50-day simple moving average. You guys know that I've had a trade on in here for quite some time. So playing this to the downside by using the long puts. And I went into the November because I want to limit that theta decay, right? When we're buying with low volatility, you can see right here, I've got volatility that's extremely low. Let me change up my marker again. Actually, I want this over here. Let me make sure there. All right. So volatility is low, right? So when we have really low volatility, we know that the pricing for the options is really cheap because that fluctuation determines option pricing. Now, so we know that pricing is really cheap. I want to be buying options because I want to buy cheap and sell expensive stuff, right? So with this said, I know that my prices are cheap because volatility is so low. I want to lean towards buying options. I had a bearish directional assumption in here. So I'm looking at doing the puts in the November, and I'm buying the 21 puts in November, or I bought the 21 puts in November for $1.75. Now I usually look for an increase of about 50%. That would put me somewhere around, let's just call it 230, 225-ish. Right now it's trading $2. So I've got a little ways to go for that type of profit target, but I have come down and tagged my 21 strike. That's one of the places where a lot of times I'll tell some of the newer traders or newer options traders that I'm assuming have a little bit less risk tolerant appetite would cover this when we trade that 21 strike that we bought, all right, because it's come down and hit our strike. We've beaten the probabilities. I'm looking for about a 50% increase in this premium at this point. Although I am going to be keeping a very close eye on this setup today because, as you know from watching these videos, folks, that I like to look for candles at the top or bottoms of moves that kind of look like that. So that's exactly what we're looking at on that candle. I need to wait for something, though, on a confirmation, which would be a candle that kind of looks like that in the next day or two, all right? So if you guys have taken anything away from this, make sure you folks smash that like button, feed those bots to run out there and find somebody that looks just like you that can, walk away with a takeaway. So that's what we're trying to do here. If you have any questions, comments, throw it over there in the comment section. I'll be happy to go over anything you guys want to talk about right now. And make sure you guys are subscribing. Click that bell because I will pop unannounced on any given day to talk about option strategies that I find to implement in my portfolio. And if you want to participate in that, make sure you're getting a notification. All right. So that's about all I got for you. Why not sell the lower strike put when you are to reach that target? Now, are you saying my 21 puts in this particular case here? Because I sold the November, I sold the 21 puts for $1.75, okay? And I did that trade. I'm trying to find the exact day that I did this trade on because it was a little while ago at this point. On the 26th of last month. So I'll just narrow this in here. 26th of last month. So just right there. So when we got this confirmation, I'll go back to the pin here. Actually, I'll go to the white one. So topping pattern here. We got the topping pattern there and confirmation the next day right there, okay? So if we look down here on these days, we can see that volatility was relatively low. Yes, it's come out, but I knew at this time volatility was relatively low, and my thinking is a correction to the downside, we get some volatility to expand. So I put on the, November. I did the Novembers, bought the 21 puts when we're trading up here. So that's what we're looking for, is right around the 36 delta on this, and paid a debit. All right. So I've gotten the directional move in my favor, which has helped. But one of the things that has been a headwind for me with this strategy is the volatility coming out. And as the volatility has come out, it has offset some of my gains, that are from the delta. Remember, if I do a 36 delta for every dollar move down in this underlying, because I'm buying puts, 36 delta, I gain for that. But with that volatility coming out, it's kind of offset it a little bit. I'm sorry, I thought you were long the November 21 put. I am long the November 21 put. And what I'm usually looking for is an increase of 50% for me, because I've got a little bit higher risk tolerant here. So I'm looking for an increase of 50%. Well, an increase of 50% here is probably around 80 cents, I'm going to call it. So if I add in this 80 cents here, because that's what I'm looking for as my profit. $2 and what is that? $2.55 is where should be looking to get out on this trade. Now, if you have a lower risk tolerant appetite or newer to options trading, when you're doing this put, you're buying that 21 put. The idea is, because it's a 36 delta, that's only a 36% probability of being 1 penny in the money at expiration. So the idea here is that I've gotten the move. I only have a 36% probability of it finishing below that 21 strike at expiration. So for lower risk tolerant folks or people getting involved in options, you're relatively new to that. I like to say, when it comes down and hits your strike location, pull the ripcord on it for whatever profit you've made, because you've beaten the probabilities of the underlying coming down. It's a win, folks. And what we want to do is to take home as many wins as we can. All right. I'm not always going to ride these things out into the sunset. I don't like to do that. If the market moves in my direction and I beat the probabilities, folks, that's when I'm pulling the ripcord on this. Now, with that said, I said I was looking for the underlying to come back down. I'm looking for this profit target. All right. Now, if I start seeing this setup, especially today and tomorrow, start getting a confirmation like this, and I get a big old green candle tomorrow, I'm going to pull the ripcord, because now the pattern's broken. All right. So that's what I'm going to look for as an out for me. All right. Yes, simply get out at 50% of max profit, especially for newer traders. Get in, get out. That will build your confidence. No, you're probably not going to make millions and millions of dollars right away, but what you will do is it will create confidence. You will start getting more accustomed to the market action and how all of the levers and pulleys are working, and therefore you'll be able to stay in this a little bit longer. But right now, I'd like you guys to stay mechanical and look for these triggers for you guys to get in and out. All right. So if you've taken anything away, if this has helped out at all, smash that like button, feed those bots to run out there and find somebody that looks just like you to participate in this video as well. I really do appreciate it. Questions, comments. I will circle back around for you folks to make sure everybody's clear of concept. And don't forget to subscribe. Hit the little bell down there at the side, because that way you guys will get a notification if I pop in here unannounced or a little bit early. Yeah, we're supposed to be doing this at around 11:30 Eastern, but believe me, there's probably 2 or 3 times a week where I'm thinking, maybe I'm just going to jump on about an hour early and talk about this trade I'm getting ready to put on. So if you have that bell, more and more confident I am that you guys have those bells clicked, I will pop in a little bit more unannounced so that we can talk about these live while we're looking at these opportunities. All right, so that's it. That's my soapbox. Check out Thursday's webinar. We're going to be drilling down on an option component where I will specifically, like this particular trade, I would have given it a little bit more justice on the long put and drilled down on volatility, delta, theta and why we are using all these levers and pulleys in our favor and how it will make us profitable quicker. All right. So that's all I got for you. Other than if you can't take that, take it easy. Bye for now. Take care.